Good afternoon, girls. Okay, so I will again begin with cost accounting now in this class. Okay, I will be discussing about cost accounting again in this class. Do you remember in the previous class I have solved one problem where you are supposed to calculate the profit by absorption costing method and also by marginal costing method and explain the difference in the profits. So this is what I will be doing. So in the previous class I've explained the absorption costing method of how to prepare the profit statement. Okay, in this class, I will be helping you how to prepare the statement using marginal costing method and then explain the difference in the profits between the two methods. So let us read the problem again for the last time. Your company has a production capacity 2 lakh units per year. The production capacity is 2 lakh units per year. And normal capacity is 90%. So these are required for absorption costing. Okay, you need not worry about marginal costing. Marginal costing is much simpler as compared to absorption costing. Standard variable costs are rupees 11 per year unit. Fixed costs 3,60,000 per year. Variable selling costs 3 per unit. Fixed selling costs 2,70,000 per year. The unit selling price is rupees 20. In the year ended 30th June 2016, the production was 1,60,000 units and the sales were 1,50,000 units. So this is the most important thing which you have to take care of. Sales 1,50,000 units. The closing inventory on 30th of June 2016 was 20,000 units. The actual variable production costs for the year rupees 35,000 higher than the standard. Calculate the profit for the year using absorption costing, which I have already explained in the previous class, and now we'll be doing the marginal costing method and explain the difference in the profits. Okay, I've already solved the problem for you. Now we will discuss. Okay, first of all, you'll write profit statement under marginal costing. Under profit statement under marginal costing, sales will remain the same. In this case, in the absorption costing, sales was 1,50,000 units into 20 per unit, that is the sales value. So what will happen, sales will remain the same here. It will be 1,50,000 units at the rate of 20 per unit, that is 30 lakhs. For this you already get 1 lakh because 1 mark. Why? Because sales is correct. Less marginal or variable cost. So under marginal or variable cost, we are having 1,60,000 units. What is mentioned? 1,60,000 units. Production was for 1,60,000 units and sales 1,50,000 units. Just remember this. Production 1,60,000 units. So 1,60,000 units at the rate of rupees 11 per unit. No standard variable cost given in the question. So 1,60,000 units at the rate of rupees 11 per unit is 17,60,000 in the inner column, not in the outer column, but in the inner column. Add additional variable production cost. So how much is your additional variable production cost? Additional variable production cost, here you'll write production cost is rupees 35,000 higher than the standard. So additional variable production cost will be 35,000. When you add, you get 17,95,000. So for 1,60,000 units, the total production is 17,95,000. This is the total cost. Okay. Now what are you supposed to do? You will add variable cost of opening stock of finished goods because we are taking only variable costs, isn't it? We are not taking fixed costs for opening and closing stock. Variable cost of opening stock of finished goods will be 10,000. Isn't it? Opening stock we have already calculated in the previous problem. In the previous problem, we have already calculated opening stock is 10,000 units. So you will take 10,000 units, again multiply by 11. You will get 1,10,000. So when you add, you are getting 19,05,000. Now what will you do? You will add the closing stock of finished goods. How will you do the calculation? Look here. For 1,60,000 units, total variable cost is how much? 17,95,000, which we have calculated here. Okay. Now for 1 unit, total variable cost will be 17,95,000 divided by 1,60,000. For 20,000, closing stock is 20,000. So for 20,000 units, what will be the total cost? 17,95,000 divided by 1,60,000 into 20,000 using unitary method. So if you follow this, you are getting 2,34,375. Then what will you do in this case? You will subtract closing stock. So when you subtract this from 19 lakhs, you are getting 16,80,625. Now you will add variable cost of 1,50,000 units. Units sold is how much? Given in the question. Excuse me. 1,50,000 units. So variable cost will be 1,50,000 units into 3, 4,50,000. This one you will add. When you add this, you're getting 21,30,625. Now this total you will subtract from sales. Then you will get contribution 8,69,375. From contribution, you will, as usual, as given in the, I have given you the format, no? Sales minus variable cost is contribution. Contribution minus fixed cost is profit. So from contribution, you will deduct fixed cost. Fixed cost will be only two fixed costs. Fixed production cost, 3,60,000, which is given in the question, and fixed selling cost, 2,70,000, which is already given in the question. So add this and subtract from contribution, you will get a net profit of 2,39,375. Under absorption costing, we got a profit of 2,59,375. Under marginal costing, we are getting a profit of 2,39,375. So there is a difference of 20,000 in the profit. If there is a difference of 20,000 rupees in the profit, that means what is the reason? Absorption profit is 2,59,375, which I have already solved in the previous class. Marginal profit is 2,39,375. So difference is 20,000. Why is there a difference in profit? This difference is due to the element of fixed cost, which is included in the valuation of opening and closing stock. In case of absorption costing, for the valuation of fixed cost and for the valuation of opening stock, we are taking fixed costs. For the valuation of closing stock also, we are taking fixed costs, and under absorption of fixed costs, all these are taken into consideration. Under absorption and over absorption of fixed costs is also taken into consideration while computing profit under absorption costing, isn't it? So under marginal costing, we don't take that fixed costs. We just take normal fixed costs deducted from contribution. But here we don't take any fixed costs. While computing closing stock and opening stock, we take only the variable cost. That is why there is a difference in the profit for 20,000. Why is the difference? Difference is basically due to the element of fixed cost, which is included in the valuation of opening and closing stock. This is how the problem is solved under marginal costing. Absorption costing, I've already explained in the previous class. You must be having the note. Now you solve the problem using marginal costing. Calculate the profit statement under marginal costing. Now I will send you a picture along with the video. Please go through and solve the problem. Okay, and write down the difference and the reason. Reason is this one. This is the reason for there being a difference of 20,000 rupees in the profit under both the methods. Okay, and write down the reason for why there is a difference in profit. First, you have to show the difference in profit and then write down the reason. And this is your workings for calculation of closing stock. Okay, which is 2,34,375. So here it will also come 2,34,375. Okay. Thank you, girls. Next, I will continue again with further marginal costing. The basic important parts of marginal costing I will be explaining in the next video. Maybe I will send the next video also today. Okay. Bye, girls. Bye.